Hi there, welcome to Kneppy Invest. Once a week, I do a technical update video where I look at charts. Typically, I focus on ASX listed companies. But in today's video, I am going to be solely looking at American based companies, including Tesla. No reason behind me doing that apart from the fact that there's a little bit more positive sentiment in the markets right now, led by Tesla. They did release a fairly positive update, quarterly update, and that's why the share price rallied about 33% in the past week. So some of the other companies I'll be focusing on in today's video include Nvidia, Shopify, Bloack, which you could also buy on the ASX under the ticker code SQ2. Also have a look at Buzzfeed. Probably a lot of people out there listening or watching this video read on occasion Buzzfeed articles, but we have seen some really interesting trading on that stock in the past 2 trading days. And also C3AI, for those who don't know, that is an artificial intelligence company. And we saw that company share price rally about 15% on the back of some interesting artificial intelligence news. And we'll also look at Qualcomm and TSMC, which is Taiwan Semiconductor Manufacturing Company, Meta, Adobe, and for those who like fast cars, did you know you can invest in Ferrari? In fact, Ferrari's ticker code is RACE. So we'll have a look at Ferrari's chart, and there is one reason I want to look at that chart, and that reason is lots of positive sentiment behind that company right now. Now onto the featured company, Tesla. Now, in my opinion, and this is just my opinion, Tesla is still significantly overvalued. I think the market cap of this company is something like $500–600 billion. Volkswagen market cap is 73. Ford and General Motors about 58. In the next year or even 2 years, Volkswagen will overtake Tesla as the largest electric vehicle manufacturer in the world. Not only that, if you look at the quality of electric vehicles, Audi is number one among many experts. And not only that, in the past, if you did want to buy an electric vehicle, you only had one choice to make, and that was Tesla. Now there's a lot of different electric vehicle manufacturers. You don't have to pick or choose Tesla. So I still think Tesla is significantly overvalued. It is a car manufacturing company. I don't listen to those who believe and think Tesla is a tech stock. It's not a tech stock. They create and build cars. To build cars, you need large car manufacturing plants. And if Tesla wants to increase their production of cars, they have to build more car manufacturing plants. And that costs a lot of money. The other thing to take notice is they have decreased the prices of some of their Teslas to increase interest. So it seems like that increase in interest this quarter has been because of that. But decreasing the cost of your cars in terms of how much you sell it for puts pressure on margins. So it's going to be interesting to see if there is that pressure on margins, which lowers the revenue in the next few quarters and lowers, well, maybe not the revenue, might actually increase the revenue like it did in the last quarter, but decreases the cash flow and decreases the profit in the next few quarters. So looking forward to that. Now, in saying that, Tesla did release a positive quarter, and that's why the share price has rallied about 10% on the Thursday, another 10% on the Friday. In fact, the share price has increased about 33% over the past week. But you can see that negative sentiment drove the share price down from about $310 in September all the way down to a low of $100. That's a decrease of 67% in about 4 months of trading. So even though it does look like the sentiment is starting to shift or turn from negative to positive, this company will need to keep on releasing positive financial news. So I don't doubt there's going to be a lot of profit taking, particularly from those who did buy near the bottom, because the share price has increased almost 100% from the lows we saw recently. So I would expect a bit of profit taking, but again, there is a cult-like following of Tesla, particularly because of Elon Musk and those cult-like figures or buyers or whatever you want to call them who just buy Tesla for no reason except it's an Elon Musk company. I have no doubt exactly exuberant about this company right now because of what the share price has done in the past week. And those cult-like people, investors, might drive the share price higher from here. Now, in saying that, that horizontal dash line is a resistance level. And we saw a lot of buying and selling back in November at that level. So that is a resistance level moving forward for Tesla. And if we see the increased volume, like we saw the last few trading days, we might, or Tesla's share price might get above that resistance level. And I think it can, just because of the cult investors who just buy Tesla because it is run by Elon Musk. Anyway, that's my opinion on Tesla. I have no inclinations, no reason to take a position in this company just yet, or maybe ever, because again, I do think this company is completely overvalued with a markup of something like $600 billion. Again, Volkswagen has a markup of 70 billion, General Motors 50 billion, Ford 50 billion. Those companies much better value than Tesla right now. And I think there is a possibility within 5 years that those other three kind of manufacturers will overtake Tesla in the amount of electric vehicles they are selling. The only company I own within this list of about, was it 10 companies, 11 companies, is Shopify. And one of the reasons I decided to take a position in Shopify was simply because the market had simply and completely overreacted, sending the share price down to below the lows we saw during COVID-19. That was the COVID-19 financial panic. And that low is that horizontal dash line on the bottom. Not only that, we saw the share price consolidate, move sideways from May last year all the way through to just recently, just above that COVID-19 financial panic low, but it did fall below that panic low for a brief period of time in October and has rebounded. Not only that, we have seen signs that the share price of this company is trying to move into an uptrend. Right now, the share price is at a 9-month high, and the highs we will see now exceed the previous highs we saw back in December. And also the lows we saw in late December were higher than the lows we saw back in October. So we have a higher high and a higher low, which is a sign the share price is trying to move into an uptrend. So the negative sentiment we saw in this company during 2022 looks like it has started to shift to becoming more positive. And that's understandable because this company is growing at a fairly quick rate. When I say fairly quick rate, I mean a really quick rate. And I think that growth will continue because this company is in the right thematic. This is an online shopping company, that one of those companies. And I think even though there was a little bit of tailwind or headwinds behind this company over the past year, there's going to be a lot of tailwinds behind this company over the next 5 to 10 years. So this is another reason why I decided to take a position in this company. Shopify might be the only company I currently own within this list, but Nvidia is one of the companies in this list that I do actually want to take a position in. And simply what's been happening with the share price over the past few months makes me think now could be a good time, or maybe to take a position, or maybe just wait for a little bit of pullback, because the share price has run up significantly over the past month, increasing from $140 to just above $200. So I think there could be some profit taking, but definitely the share price right now for Nvidia is looking like it is moving into an uptrend. Just like Shopify, we have seen a higher high and also a higher low. Not only that, share price was in a downtrend, and I portrayed that downtrend by the horizontal, not the horizontal, the sloping dash line. So when the share price hit that downtrend line, we saw share price retreat, and then the share price of Nvidia pulled through that downtrend line on strength in November. Share price went sideways, but that was the end in the downtrend for this company. And now the share price is trying to move into an uptrend. So at this point in time, it does look like, well, it does look interesting for Nvidia. Now, my only problem I had with Nvidia over the past, say, 2 or 3 years is the valuation. So the market is aware that this company should see a lot of tailwinds behind it and should see explosive growth over the next 5 to 10 years. Some of the technology this company is producing is quite astonishing, in my opinion. I won't talk about it in this video, but that's another reason why I want to take a position, because this company is at the forefront of technology. And one of the things I did see the other day was a camera using NVIDIA technology if you're not looking at directly at the camera, it will seem like you are looking directly at the camera when you play back the recorded video. So that's some of the technology they are releasing or have developed. So I am interested in taking a position in Nvidia. I was thinking of taking a position a few months ago, but I've held back. But I think it does look promising for Nvidia right now with the share price moving in an uptrend. Another company where the trend and the sentiment of the company is starting to shift from highly negative or in the downtrend to highly, maybe not highly, but positive, with the share price starting to look like it's trying to move in uptrend, and that is Bloack. Used to be called Square, now it's called Bloack. You can buy this company on the ASX. The ticker code is SQ2, but the share price was in a well-defined downtrend until recently. But it does look like that trend is starting to change with a new higher high. We also saw a high low. Share price was going sideways for the longest time, like the last 7 months. That horizontal dashed line, I think, was the COVID-19 lows. So the share price has been below the COVID-19 lows for a while. In fact, for the last 7 months. And the last time it tried to get above those lows was back in August. You can see the share price rebound to that resistance level because it was support. Then it became resistance. You can see the share price really struggled to get above that resistance level right here, if you can see my mouse. And now we're trying, or the share price of Bloack is trying to get back up to that level. So maybe when the share price does breach that resistance level on the strength, that could be the time to take a position in Bloack if you want to. In TradingView, I have about, say, 200, 300 companies in my US watch list, including Buzzfeed. And the only reason I put Buzzfeed into that watch list is simply because on occasion, I read a Buzzfeed article. Who doesn't? Anyway, Buzzfeed has been plagued by problems. Lots and lots of problems. And the share price has really depicted those problems, falling into a heap. But then, over 2 trading days, we saw the share price increase by 100%. It was like 115%, and then 85.2% on huge volume. In fact, you can see on the bottom here, these 2 bars here is the volume. So 200 million shares traded on the Thursday and about 250 million shares traded on the Friday. And you can see no other volume bars previous to that, which means there was massive volume on these 2 trading days. So what happened? What caused this interest in Buzzfeed? It was 2 pieces of news, a deal they made with Meta, and something else to do with ChatGPT. If you don't know what ChatGPT is, or just Google it, and you will know fairly quickly. In fact, I'm starting to hear ChatGPT mentioned in more and more articles, in more and more podcasts. It is a thing that could revolutionize the world, and AI will be a thing that revolutionizes the world, and ChatGPT is one of those things that people are going to start using more and more. And there was an interesting article, I forget exactly where I found this from, but it says here, BZFD columnist tells CEO to get effed for move to AI content. And to be honest with you, journalism is under threat because of AI. There's a lot of other professions under threat because of AI, and journalism is one of them. And that's why this Buzzfeed columnist is upset, because the trend will be there. Would you rather pay not much for AI content or pay journalists $100,000 a year? So no doubt, because if I was running a company like Buzzfeed, I'd much rather pay AI a little bit of money, or pay a company that produces AI a little bit of money, than pay journalists a couple of $100,000 a year. So I have no doubt that's why the share price has rallied on the back of this move to AI. Another AI company that has rallied a fair bit over the past month or so, in particularly the last trading day, up 17.8%, is C3 AI. I don't know much about this company, but this is a company that produces AI software, that sort of thing. And the sole reason why the share price of this company ran up 17.8% was because of an agreement between the White House and the European Commission to launch first of its kind AI agreement in all sorts of things between the United States and Europe. And we're going to see this sort of thing become more prevalent, because AI is starting to look really interesting right now. if you don't know what AI is doing right now, I think it is time to stop what you're doing and just Google anything in regards to AI, because AI is going to revolutionize the world over the next decade, and C3 AI might be at the forefront of that revolution. And it's kind of funny because I think I've mentioned maybe you should go Google something to find out what's happening. And to be fair with you, Googling could become defunct because of what's happening in AI. And I do know at Alphabet, this AI, or what's happening in AI, ChatGPT, is a red trigger. They know it's happening, and I have no doubt Alphabet is doing something similar. But the question is, just because Alphabet is doing it, just because there's something called ChatGPT out there, doesn't mean those are going to be successful. It could be another company out there. I do think Microsoft invested a lot of money into ChatGPT, so Microsoft could be another company to look at, but there could be some other company we don't know anything about that could be at forefront of this AI technology, and that will be the company or a group of companies that you want to invest in, because in my opinion, AI, again, will revolutionize the world over the next 5, 10, 20 years. Now onto Qualcomm. Now, Qualcomm is like a semiconductor manufacturer, something like that. Anyway, I did have a look at the valuation of Qualcomm, PE ratio, something like 13 or 14. It looks fairly cheap. Share price of this company was in a downtrend. You can see or portray that downtrend by that sloping dashed line. And over the last 5 trading days, that downtrend has been breached. You can see the candlesticks, the last 5 candlesticks have gone above that downtrend line, which is good sign for Qualcomm moving forward. So this is another company I've been thinking about taking an investment in. I haven't done as much research on Qualcomm as I have on Nvidia and TSM. In fact, we'll be looking at a TSM chart fairly soon. But Qualcomm is a potential another company to have on your watch list for a company that will no doubt be significantly bigger, or maybe not, no doubt, I shouldn't say no doubt, but there's always questions, there's always a risk, but I think there's a good chance that Qualcomm will be significantly bigger than it is now within the next, or not within, in the next 10 years. And talking about TSMC, which is Taiwan Semiconductor Manufacturing Company, I think I have that right. This is another company I really want to take a position in, and I saw the share price hit that support level at $60 back in October, start of November. Just one nice little bounce off that support level. So those who believe or don't believe that support and resistance levels work, there is countless examples of support and resistance levels working. And this is one example of a support level working. And the reason it works is because traders out there know about support and resistance levels. And when they see the share price of a company they want to take a position in get close to that support level, that's when you see heightened interest and heightened buying in that company. And that's exactly what happened with TSMC back in October and November. Share price has rallied nicely since then, going from $60 to a current share price of $93.30. Not sure what happened during the week. There's one day where the share price opened at about $106 and then fell off. That tells me there's a lot of selling on that day. You don't see the share price open significantly higher than the previous day, and then the share price finish significantly lower at the end of closing on that same day, unless there's a lot of selling. Anyway, share price is now trying to move into an uptrend. We have seen a higher high and a higher low, so the trend is shifting. My only concern is that big down day. Well, not a down day, but a lot of selling on that day, which would have been on Tuesday. So that's my one concern, is that interesting candlestick on that one day. There is a lot of conflicting information out there in regards to Meta, a lot of differing opinions, probably the best way to put it. Some people absolutely hate this company. Some people think it is completely undervalued right now. And one of the reasons why the market has punished Meta is just the amount of money they are spending for the Metaverse. They even changed the name to Meta to take advantage of the potential of Metaverse. But the share price has run up a lot since the lows we saw back in November. Share price hit a low of $90, and the current share price of this company is $151. So that's a nice 67% gain in a fairly short period of time. But if you do look at the valuation of this company, I would still say Meta is potentially undervalued. But I do think right now we are starting to see sentiment beginning to shift in this company from highly negative. When I say highly negative, probably the most negative company on the Nasdaq or even the New York Stock Exchange combined, and lots of negativity around Meta, but potentially that sentiment is starting to change right now. Not going to call this new uptrend in the share price. I do think with the share price running up a fair bit over the past few months, there will be some profit taking. So I won't call this the start of a new uptrend for this company just yet, but it is starting to look way more interesting right now for Meta. And I probably should also mention that bottom horizontal dash line was a COVID-19 lows. The share price of Meta fell well below the COVID-19 lows. And recently, the share price has now moved above those COVID-19 lows on pretty good strength. So that line was support for a while, for a very short period of time. Then it became resistance. And now because the share price has moved through that resistance level on strength, that means there's a lot of strength in this rising share price for Meta. Adobe is one of many companies within this video that I have thought about taking position in. In fact, I was thinking of taking a position in this company a few weeks ago, but it's just another one of the companies where it does look like the trend is trying to shift from negative or from a downtrend into an uptrend. And it does look like the sentiment in this company is shifting from negative to positive. Now, the share price is slowly maybe not drifting, slowly creeping upwards. No big days or up days, but we haven't seen a lot of selling either over the past few months, but the share price is just creeping up slowly. And I do like share prices of companies that just creep up slowly. So the share price right now at $370 is only at about a 4 to 5 month high. Preferably, I like to see companies at a 6-month high because we saw a lot of investors who bought into Adobe during 2022 at higher prices who probably want to sell out without a loss or anything like that. And that is called resistance. So those investors who did buy at higher prices and who want to sell out are resistance. They will suppress any significant rise in the share price unless there is strength, unless the company releases a really good quarter, and maybe they will, and that could lead to run up in Adobe's share price. Last company I want to look at is Ferrari, ticker code RACE on the New York Stock Exchange. And the share price for this company looks really interesting because the share price is at a definite uptrend right now with a higher high and a higher low. Share price finished at $253 on the last trading day, up 2.4% from the previous day. The last time the share price was this high was way back in January of last year. So right now, Ferrari is at a 1-year high, and that is good news for investors. That means there's not many shareholders in this company who are underwater, who bought it at significantly higher prices in the past year. So this is in actual fact one of the best looking charts in this video today. And I just wanted to include it because I just love the ticker code for this company, RACE, Ferrari. So if you like fast cars, if you love Ferrari, maybe this is one of the companies you might think about taking a position in. That's all I have for this technical update focused on American listed companies on the New York Stock Exchange and the Nasdaq, including 2 car manufacturing companies, Tesla and Ferrari. If you have any questions about any company I have focused or featured in today's video, please leave your thoughts, your question in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.